one of the things that has been struggling is the crypto markets and the tech markets, which gives us, as always, a lot to talk about. And this week, I suppose I was wondering, whether this latest trouble is something serious for Bitcoin. And certainly one institution thinks so, because the Bank of England has issued a warning that Bitcoin could go to zero. And I've never seen anything like this before in my whole life. That, a major financial institution has warned about crypto going to zero. And I just wondered what you make of this incredible new prediction from a central bank.
Yeah, look, the Bank of England's a weird beast, right? I mean, I find it really interesting that the Bank of England wants to come out and talk about the crypto markets when previously they've said it's not really a great risk, it's not a great systemic risk. They've more or less said, we're not that bothered by it. And yet at the same time, they also come out and say that it could go to zero and that investors should expect to lose all their money. And yet all of this, while they're pushing this narrative that they want to introduce a central bank-backed digital currency, that they want to get into the digital currency space and issue digital currencies to people. And yet all of this as well with the backdrop of soaring inflation, which this week we saw, I think it was at 5.5%, might even be higher here in the UK. The numbers that you see are actually usually not as bad as the actual numbers really are. So inflation is soaring, which means that the value of a pound in your bank account is eroding. So while their dirty fiat money is decreasing in its value and does so over the long term, they come out and warn people about losing all their money if they move into the crypto markets. And I guess I shouldn't expect any different, right? I mean, it'd be like when email first came along, Royal Mail saying, email's great. Go on email. Yay for email. We shouldn't really expect any different. I just think what they're doing is actually irresponsible, because they're not. They always bang on, and the regulators bang on about providing, the right information and helping people to understand risks. All they're doing is just pushing out these really quite, this lack of knowledge really that they're showing is that, this could all go to zero. Well, to say that is just ridiculous. And it shows their position really. It shows their hand. So, I guess they've got vested interest in keeping, their monetary policy going. They've got a vested interest in trying to justify their own existence. And they talk about trust, but trust in the traditional system continues to erode. So it's frustrating, because a lot of people then look and think, well, these guys must know what they're talking about because they're central bankers. It's like, well, they know maybe a thing or two about the traditional financial system, but they're really making comment on things that they do not fundamentally understand.
Would it be fair to say, though, that, when I saw it, my interpretation was not, this is like a serious piece of analytical research, it could, because obviously you could say that for any asset. But it's sort of more a response to the increased involvement of retail investors. Like we've mentioned before on this podcast, an article written in the FT about, 12 and 13-year-olds in the school playgrounds trading crypto on their mum's credit cards or whatever it is. There are some pretty insane ends of the speculative frenzy with crypto, to do with, how unregulated certain aspects of it are. And that, it's not the only place where speculation is happening by any stretch, but I just wonder whether it's more them sort of saying you can lose money, because in that article, there was a quote of a 13-year-old saying, what would you do if Bitcoin went down? And they said, oh, well, it's fine, because every time it goes down, it always comes back up and goes higher. And just that sort of incredibly ingrained by the dip mentality, which has come also from like equity markets, right? We see the buy the dip mentality so powerfully in equity markets as well, and bond markets too. But that this is more, it's not a sort of serious thing. It's more of a sort of, don't forget that you can lose money. Like, don't risk, it's shorthand for don't risk more than you can afford to lose. In that, would that be fair, do you think?
I see where you're coming from, but if they're trying to say, you should, take, educated risks in your investments, they should say that, not just focus in on, your Bitcoin could be worthless. I think what they're doing is is really they're shooting themselves in the foot as well, right? So a lot of people are just like, well, what do you know? Over the last decade, if you look at the long view, then yeah, okay, kind of in the crypto markets, number does go up. And yeah, look, there's some irresponsible practices. There are 13-year-olds trading. So what? Who cares if 13-year-olds trading? I don't think. I think that they make the problem out to be considerably bigger than it actually is. If there's a 13-year-old that all of a sudden has become interested in investing or in the markets or in trading, okay, it might not necessarily be the most ideal gateway in, but it's a damn sight better than a lot of other things they might be looking and spending their time on, even if it's just playing Call of Duty or something like that. I mean, I've got nothing against Call of Duty, but we need to find a way to help educate people in a responsible and serious way about what is really, it's not a gambling market. This is a serious global market with serious institutions, serious organizations, serious long-term potential behind it. And they come out and just throw out this flippant, could be worthless, Bitcoin could be worthless. I just think that they put themselves on this pedestal of being an authority and being a place of trust and quality information. And then they go and spiel off some kind of crap like that. I think it really just shows that probably they don't care about anything really other than their own self-serving policies, trying to justify their own existence and the mistakes that they've made for the last 12 or 13 years now. If they want to pass comment about markets, they should maybe start thinking about passing comment about how they said that inflation is just going to be, a minor, impact on things. It's not going to be, it's going to be just, here and it'll disappear. When in reality, the cost of living for a lot of people is skyrocketing at a time when, life's pretty tough. So I just think the central bank, the Bank of England, kind of should stick their nose somewhere else. Rather than pushing people away from a market that there is a lot of opportunity in and that people can actually build wealth in outside of traditional financial measures. And anyone that sort of denies that that's a reality is ignorant. And I find the comments, typically the comments that come out of the Bank of England, are incredibly ignorant when it comes to the crypto markets. They just see someone got scammed, or they just see something got hacked, or they just see a volatility in a price of fiat money, and that's it. It's puddle depth knowledge, really, and that's a shame because I think there's a lot of people across the UK that want to know more and should know more about how this market works, the catalysts that really push it forward, the development of technology that we're seeing unroll in front of our very eyes, and how that's going to help drive innovation. It's going to help drive growth in the UK. It's going to provide jobs. There's a lot of benefits that this comes. And then when they come out and say Bitcoins could be worthless, it's ignorant, the way I take it at least.